Hello, everyone. I'm just going to give it a few seconds here. I can see we still have a bunch of people hopping in. So thank you so much for being on time today. And thank you for making the choice to invest in yourself and your practice by joining today's CE-accredited financial planning session. Transform the way you deliver advice with the snapshot from Snap Projections financial planning software. You must stay for the full session today in order to be eligible for your CE credit. Shortly after the session, you will receive a brief form to fill out via email, which is how you will request your certificate from today. In addition to the CE credit, we do have a special offer which will be shared at the end of the session. My name is Alex Mercer, and I will be your host today. I'm joined by my colleague, Steve Arnott, Snap's Financial Planning Project Lead, who will provide today's demonstration and run the Q&A. Before we get started, I just want to do a quick tech check to make sure you can all hear me and see my screen. Can you send me a quick yes or even a smiley face through your question tab? Just click the arrow beside the word questions and a window will pop up where you can type and hit send. This is exactly how you'll send any questions you have throughout this session. Oh, wonderful. Thank you so much, Nick, Mazen, Mike, Glenn, Kevin, Jack. Glad to know you can all hear me and see my screen. So Steve and I have our cameras turned on just to say hello. We will now shut them off to give you a full screen view of our presentation. So many of you here today already know us, but for those of you who do not, if you've never been to one of our sessions before, Snap Projections provides transparent, easy to use, and highly flexible financial planning software for Canadian advisors. This product continues to be developed with advisors for advisors. Advisor input and involvement is how we continue to bring what you need to market. If you want to hear from other advisors who are already using Snap, you can find reviews numerous places online. For example, on Capterra, which is an independent third-party software review site, you will find advisors saying things like none of their clients retire without a Snap projection, and that the software has become foundational to their firm. As you can see, we are currently sitting at 4.9 out of 5 stars. We have been in market for 10 years, enthusiastically serving the thousands of financial advisors, planners, and investment managers who partner with Snap to grow their assets under management and increase quality referrals. We are trusted by major firms such as CI Asante, Aligned Capital Partners, CI Direct Investing, PPI, Sterling Mutuals, and many more. And we are thrilled to share that Snap Projections financial planning software is now available in French. Our customer support is still in progress. We are still working on hiring a bilingual customer support team member, and we are continuing to translate the knowledge base and training materials. But the software itself is fully functional in the French language. Bilingual customer support is coming very soon. You have the option now to change the language from within your user settings from English to French. So very excited to announce that today. So let's get into it and talk about the current problems with advice delivery. This is why we are all here today. The reports generated by financial planning software, simply put, are too long. Even though Snap's comprehensive reports are client-friendly and easy to understand, the reality is that for many clients, even a 5-page report is still too long. When the clients can't see the information they care about the most on a single page, the message often gets lost. So the first problem here is that the client isn't getting what they need from the current reporting experience. And this is happening across the board, regardless of which planning software you are currently using. The second problem is that as a solution, many advisors are spending hours upon hours building customized reports in-house to provide their clients with the type of report they want. Many of you have told us you've had no choice but to resort to using Canva, PowerPoint, Google Slides, Google Sheets, or Microsoft Word to build your own 1 or 2 page report summaries. And this is after all the plan building work you've already done. In this case, no one is winning. Either the client doesn't get the information they care about in the way they want it, or the advisor is using up valuable time and resources building customized short reports. We're going to show you a better way. Today's session is about transformation. It's about providing a modern, highly personalized planning experience to your clients in less time. Advisors already using Snap are telling us that this is now so fast, they are able to create a snapshot between client meetings. They're also saying that their busy, high net worth clients are absolutely loving the one pager because they are simply too busy for anything more. Advisors are saying that because of snapshots, they are saving at least 45 minutes to an hour every single client meeting because they no longer have to build a customized report after the projections have been created. Now, this problem hasn't been solved previously because of the sheer challenge that comes with building something that is both customizable and time-saving. What matters most to each client is totally unique, so a cookie cutter solution will never be adequate. When I hand this over to Steve, he will show you how the automated dynamic templates that use plan variables work. So these are the 3 most common use cases for the snapshot report. You can create a standalone client deliverable, meaning the snapshot becomes the client-facing report. You can use it as a template for your annual or quarterly reviews, or you can use it to create an executive summary to the full comprehensive report. When you're deciding which option will make the most sense and provide the best client experience, there are 3 questions you can ask yourself for some direction. First, what questions am I trying to answer for my client? What do they want to know? Next, how detail-oriented is this client? How much information will they want and be able to digest? Lastly, how complex is this case? So I'll introduce you to our 3 client cases today, and then Steve will hop into the software and show you the full process to build the financial projections and create a customized snapshot report. So we'll start with Michelle Evans. Michelle is 50 years old and is 10 years away from her goal of retirement. She resides in BC and represents a fairly common non-complex financial planning case. Next, we have Will Porter. Will resides in Ontario. He is 2 years into his retirement and requires ongoing management throughout his asset decumulation years. And third, we have Lisa Ramiro. Lisa resides in Alberta. She's a younger client with more complex planning needs, and she will be our more complex planning case today. So I'll get Steve to take over and log into Snap.
Terrific. Thanks so much, Alex, and thank you everyone for joining us today. Snap Projections is a web-based platform, which means you can access your account from any Chrome browser on any computer without the need for a download. You'll go to snapprojections.com, and then in the top right corner, you'll click Login to enter your username, password, and the option for a multi-factor authentication. I've entered that all during today's session, so I'll click Login and go directly into the software. I'm taken initially to my clients page where I can view and edit any of the previous projections that I've created, or I can get started on a new plan by clicking Add New Client. Before we show you creation of a plan in Snap, I just want to start with the final deliverables so that you have a sense of what we'll be working towards today. This first example is a 1-page report created for Michelle Evans. This is a total summary of the projection that provides the goal summary, key assumptions, the client's net worth broken out by key categories, their retirement income and where their money is going to come from, their goal status, so whether they're over or underfunded and whether they're on track for their goals, as well as a customizable recommendation section. The next example that we'll provide is related to a 2-page annual review. So this is for the second client that Alex mentioned that we'll be showing in the software, Will Porter. In this case, he's already retired, so you'll see that there's a little bit different language in the goal summary section. We're no longer referring to a retirement target, we're now referring to an estate target. So again, these are all fully customizable, and you can save the templates and custom reports for future use, so that every year when we re-meet with Will, we'll be able to quickly update the plan and provide him with a consistent reference point over time that he can refer back to and compare. So in this case, we're using a 2-page report, so we have a bit more information, such as the financial asset flows, which is showing him exactly where his financial income is going to come for the next 5 years. We can also see that there's a bit of a shortfall for the last 2 years. So we just have more detail in this 2-page version of the snapshot. And then the final example is related to Lisa Romero's case, which we'll go through at the end of today's presentation. Here we're using a full client report. So we still have our cover page, our custom logo, we have our disclaimer, and then we have the executive summary that is placed at the beginning of a more detailed report. So here again, we have the advantage of Lisa being able to fully understand the plan before she starts to dive into the more granular assumptions and charts and tables. She already knows that she's on track for her goals. She can see that she has a fairly sizable estate at the end of the plan. She knows where her money's going to come from, and this will allow her to more easily digest everything that follows. So with those examples in mind, let's show how you can go from data input to a custom 1-page report in as little as 15 minutes. We'll go back into Snap and we'll click Add New Client to get started with our plan for Michelle Evans. So I'll input the first and last name as well as her date of birth, which is 1974. I'll also update her province of residence to British Columbia. You'll see in the top left corner that there are 3 key sections to the Snap software. There's the scenario setup, which we're currently proceeding through. This is where you'll input things like the client data, general plan settings, expenses, incomes, and assets. Once we're done with the scenario setup, we then proceed to the planning pages where all of that information comes together to show us our client's life on one page. From here, we can review all of the key information and we can edit individual values for any year or period within the projection. Once we're comfortable with all the numbers, we'll then proceed to the client report where we can customize the charts, tables, and commentary that we want to include in the final deliverable. For now, we'll proceed on through the scenario setup. I'll click Next at the bottom, and we'll go to our general settings page. Michelle's goal is to retire in 10 years at age 60, and we'll run the projection until her age 97. Scrolling down, we have our default rates of return already saved and our inflation rates pre-populated. So we're using inflation of 2.1 and rates of return of 1, 2, and 5%. You can always adjust these and then save those defaults for future plans as needed. For expenses, her target retirement income is $48,000 a year or $4,000 a month, plus an additional travel budget of $10,000 for the first 15 years of retirement. So that'll start at age 60, run to 74, and we'll highlight that in the chart to draw attention to the fact that that additional travel budget is funded. So there's lots of customization options for entering expenses. You can enter in a general annual need, plus itemize out any desired additional expenses like car purchases, gifts to kids, and anything else. Proceeding to incomes, we can enter in Michelle's current salary, which is $110,000 per year. She expects that that will increase over time with inflation. It's entered as employment income, so Snap will automatically deduct CPP and EI. It will be taxed appropriately, earn additional RSP room, and it will run until the end of the year prior to her retirement. She also has a pension plan that we can input that will start at age 60 when she retires. It will provide $35,000 a year with no guaranteed indexing. And then after the bridge benefit drops off, she'll receive $28,000 a year from age 65 onwards. I'll click Next and go to the Assets page where we can enter in all of her existing balances. you'll see that Snap adds a default non-registered account to each plan as a starting point. I'm just going to update this description to say savings, and that has a current balance of $50,000. And that's currently 100% invested in cash with a 1% rate of return. I'll click Add Financial Assets, and we can input her TFSA, which has a current balance of $110,000. And that's invested as 30% fixed income, 70% equities. So you'll see Snap is pre-filling my default rate of return values for each account and then calculating a portfolio total. I can also customize the rate of return assumption for each individual account if I expect a higher or lower equity rate of return on that particular investment. Next, I'll add in the RRSP, which has a balance of $325,000. Similarly invested as 30% fixed income and 70% equity. Now that we've added her financial assets, you'll see across the table at the top, there are tabs available for the different registered account types. So if I click TFSA, I have additional customizable settings available to further refine the plan as needed. This is a common theme throughout Snap, where you can get started with a quick, simple, conservative projection, or you can dive into the more granular settings that are available for you to customize the plan. So here I could update the contribution room if she had additional carry forward available. With the RSP, again, I can adjust the contribution room, or I could set the conversion age for her RSP turning into a RIF, which we'll see in the next client scenario. Going back to the assets, I'll scroll down to the real assets section where I can input her home, which has a current value of $700,000 and an original purchase price of $450,000. We'll assume that appreciates with the rate of inflation. We do have the option to model future purchase age or sale age if the client's saving up for a home or if they're going to downsize or sell a rental property. And then we can indicate whether there are capital gains applicable to that transaction. Under the debt section, we can input her remaining mortgage, which has a balance of $145,000, interest rate of 5%, and monthly payments of $1,600. And we can link that directly to the home so that if we sell the home at any time in the plan, if there's a remaining mortgage balance, Snap will repay that at the same time. Lastly, we'll go to the government benefits where we can customize the start age as well as the expected benefit for that payment. So here we're going to assume that she'll receive 75% of the national average, or sorry, 75% of the maximum, which is 20% higher than the national average, which is pre-populated in the plan. So we're going to start at 65 with 75% of the max. For old age security, we'll assume 65 start age with 100% of the maximum. And just like that, we've proceeded through all of the relevant scenario setup pages for Michelle's case. You'll see on the left, there are a few pages still available. We could input insurance policies. We can conduct life needs analysis to see if more life insurance might be required. We can add RESPs, customize additional settings, or enter in a corporation. But for now, we're going to click on planning pages and view everything that we've input so far to see Michelle's life on one page. Now, the planning page can be overwhelming the first time you see it, but once you know what you're looking at, it's incredibly intuitive and a very powerful section of the software. On the left, we have the year and our client's age. Then we have the discretionary or leftover cash flow that's the software has calculated based off of everything we've input so far. So this $62,000 is calculated by taking the client's employment income of $110,000. It then subtracts off CPP and EI deductions. It subtracts off the taxes payable, and it subtracts off her annual mortgage of $19,200. This leaves the client with $62,000 available for savings or spending needs. We also have other key information on this page, such as the marginal and effective tax rate, and all of the information related to the financial assets. So we can see the values, any contributions or withdrawals, and the rate of return. And then on the right, we have the home and the net worth and estate information. And any blue value that you see on this page, any blue or purple value, is fully customizable for 1 year or for any period of the plan. So for instance, Michelle expects to max out her TFSA moving forward. So I'm going to enter in a $10,000 contribution, and I'm going to copy that down until the last year of work. She's also making $6,000 a year or depositing $6,000 a year into her RSP and expects to do that on an increasing basis with her salary. Now that I've entered these contributions, you'll see that the Run Scenario button in the top right has turned red. This just means that the software is waiting to recalculate all of the numbers based off of my changes. So rather than constantly refreshing the numbers on you, the software waits until you're done making edits. You click Run Scenario, and that's going to recalculate the page. You'll see at the same time that it's recalculating the page, it has also changed my $10,000 contribution request to the maximum expected annual value going forward. So Snap has guardrails in place to prevent you from over contributing to an account or taking out a balance from the RIF that is less than the minimum. So now that I've entered TFSA and RSP contributions, if I go back to the calculated cash flow, you'll see that there's now $51,000 assumed to be available for spending needs. As we fast forward down to 2034, when she's set to retire, we can see our target $48,000 a year goal has been entered there. We also have the additional travel, and both of those have been inflation adjusted to make sure that the client's purchasing power remains intact over time. That spending is going to be funded by her pension of $35,000, and then Snap has calculated how much to take from her other financial assets as withdrawals in order to supplement that pension income. Now, Snap does this withdrawal order in a tax-efficient manner, and that can create a quick and simple projection for you, but you do have full customization and control of these withdrawals. So if you want to check a different strategy, or if the client is already withdrawing in a particular way, you can enter in those withdrawals, as we'll see in our next client case. So the software withdraws throughout retirement. As we continue down in the projection, we can see that as of the final year of the plan in 2071, when Michelle is 97, there's roughly $500,000 remaining, and she's been able to spend at that $48,000 a year goal, adjusted for inflation, all the way until that final year. We can review this plan in the form of various charts. So we have the cash outflow chart that shows the client's base spending of about $50,000 a year, their additional travel once they retire, their income taxes payable, mortgage payments, and contributions to financial assets. We can also see where her money is expected to come over time, whether it's pensions, government benefits, or financial assets. And we can see her net worth broken out by key categories. And all of these charts are fully interactive. So if I remove the net worth and real assets, you'll see a summary of her financial assets or her liquid position. We also have a recommendations tool where you can go in and review calculations that could use some of this overfunded status. So right now she has about $500,000 left. So we can look at things like retirement age to see maybe she could retire a bit earlier if she wants to use up that surplus. So here she could retire 1 year earlier while still being on track for her $48,000 a year goal. Or if she wants to increase her spending, she could increase to about $51,000 a year, increasing by about $3,000 from her current goal. So now that we're done with the planning pages, we're ready to go to the client report where we can create that one-page report that we saw at the beginning of the demo. We'll go to the report builder where we can customize what pages we want to include in the final deliverable. I'm going to click on snapshots only, and that's going to filter out or gray out all of the other pages so that I can focus my attention just on this snapshot section. There are 10 summary pages available that I can include in my snapshot, and there's lots of flexibility depending on the client's case to see which ones are most relevant. So in this situation, I'm going to remove the financial asset flows, which I can do by clicking on it and dragging it outside of the list. I'm also going to remove the net worth statement summary, which I can delete by clicking and clicking delete. I'm going to get rid of the expense summary, and then I'm going to get rid of the estate summary. And that will leave me with 6 tiles within the snapshot, and that is what will create a single page summary report. I can also reorder these if I want. So I'm going to drop the goal status down just below, just before the recommendation summary. So now I've customized the pages that I want to include. Next, I can go to the report editor where I can view and update what information will show on each of those pages. So I'll click Goal Summary. And here you can see that there's an initial pre-populated set of values that Snap has created for us. So we have Michelle to retire at age 60 in 2034 with a target spending prior to retirement of about $54,000 a year, and then a target spending after retirement of $48,000 a year. Now, the most important thing I want to emphasize today is that these values are dynamic template variables. So these aren't hard-coded values that you have to change over time if you update the plan or when you revisit it in a year. These are all referencing specific variables in the software. And you can see those variables on the right, and you have the option to actually use those within your writing. So you can set up custom text that references specific values that are important to you and your client. And that way, anytime that you apply those saved preferences to a new client scenario or to a future scenario for this same client, it's going to automatically update those values, and it's going to save you a ton of time in terms of creating custom reports. So here's an example. I could just add in a fourth bullet that references her additional travel goal. So we'll say additional travel budget starting at, and then I'll click on the retirement age, and then I'll write in a retirement year. So I've brought in these variables so that if I update this plan in the future, those will get carried into the report automatically. I'll click next, and we can once again see a similar layout for the assumption summary. So we have some of the key variables that are underlying the outcome for the client, and we could add to this as desired, or you can remove it as well. And for any of these pages, you can click on the defaults and then save the settings for new scenarios. And that's going to allow you to create an initial custom report that then applies to all future plans that you develop for this client or for other clients. Continuing to review the pages that would be included, we have a simplified net worth chart, retirement income, a goal status, which is bringing in those recommendations that we calculated. And we can also add text here if we want. So another option would be leaving a larger estate to your beneficiaries. So lots of customization options in terms of adding static text or dynamic variables, removing anything that you don't want to see, and then saving those preferences for future plans. And then the last page is a fairly open recommendation summary where I'm going to just copy in some pre-developed text that I have. So just some congratulations and next steps. Now that we're done with the report editor, we'll go to report preview where we can see that single page come together for us. So this is the exact report that we reviewed at the start of our demo that has the goal summary, assumption summary, net worth, retirement income, goal status, and recommendation. So in about 15 minutes, we've been able to go from initial data input to a customized one-page report that we would just click generate PDF and then download the file to share it with our client. So that's the first example we wanted to go through where we're creating a one-page client report. The next example that we'll do is a two-page annual review document. So I'm going to click add new client, and we'll get started with a projection for Will Porter. So Will was that already retired client that Alex mentioned earlier. And he's currently living in Ontario and was born 1957. Once again, similar layout. We have the three sections to the software. We're going to continue through the scenario setup in order to customize the plan for this client's case. Now, they did retire at age 65, so we can leave that here so that the software pre-populates other assumptions based off of that initial retirement age. And we're going to run the projection until age 94. We have our inflation rates, rates of return. For expenses, there's only an annual spending goal in this case of 60,000. There's not that additional travel that we saw in the last case. So 60,000 a year. There's no employment income because Will is already retired, so we can delete that. We can enter in his existing assets. So we're just going to delete this default non-reg that's pre-populated, and we'll input his own existing non-reg portfolio. So he has 250,000. That's invested as 40% fixed income, 60% equity, and the cost based on the account is 230,000. We'll also enter in his TFSA of 110,000. He has a RIF of 385,000, a LIF of 225,000. And I mentioned in our last case that we can use these tabs for the different registered accounts to indicate things like when he converted the RSP into a RIF. So he did that at age 64. So this way Snap knows that the account is already a RIF. It can calculate the minimum. It will automatically calculate the pension tax credit, and it will know that this income is eligible for pension splitting if Will had a partner in the plan. Now that we've added the accounts, I'll go down to the real assets and input his home, which has a current value of 600,000, an original purchase price of 250,000, and similar options to what we saw previously. There's no debts that he has outstanding, so we'll go next to the government benefits. He started taking that at 65, and as of this year, he's expecting 12,900 of total CPP payments. So we can input the dollar amount directly here. And then for old age security, he's receiving the maximum. So now we're all set with the scenario setup, and we can click on planning pages to again see how all of this comes together to show us Will's life on one page. So we have the year and Will's age of 67. We have his spending goal of 60,000 a year, and that's being funded partly by CPP and OAS income. And then Snap is taking the required RIF minimum, LIF minimum, and then supplementing all of that with non-registered withdrawals. Now we know, because we've been working with Will, that he has an automated withdrawal schedule in place for both his RIF and his LIF. So we can customize this drawdown to be more reflective of the client's actual situation. So he's taking 18,000 a year, and we've planned to do that for the foreseeable future. So we'll copy that down until age 70. So you'll see I can customize any single year or period of the plan to reflect the client's situation. He's also taking 12,000 a year out of the LIF, which we'll copy down until age 70. And then the final edit is he's currently maxing out his TFSA on an annual basis and pulling that from the non-registered account. So we're going to continue that for the foreseeable future. I'll click the red run scenario, and that's going to update the plan with the changes that I've requested. So we're now taking 18,000, 12,000, we're topping up the TFSA, and you'll see that Snap has automatically adjusted the amount to come out of the non-reg to fill in the gap for how much the client needs. So there's 23,000 coming out, both for spending and to top up the TFSA. As we continue down throughout retirement, you'll see that Snap continues to withdraw money on a tax-efficient basis until the final 2 years, where Will is projected to run out of money and he has a bit of a shortfall, and there's pink shading to draw our attention to that. So this is something that we can highlight in our conversations with him and just talk about the different options of using the home equity, either through selling, downsizing, or a reverse mortgage to supplement those final few years of spending. Again, we can review the projection in the form of the charts, and we can use the recommendations engine to provide options to avoid the shortfall. So if the client was not already retired, we would have the option to calculate the required savings or the retirement age that he would have to extend his work towards. In this case, really our only option is adjusting his spending. So we could reduce his spending by about $1,300 a year, and that should avoid the projected shortfall. So now that we're done with the planning pages for Will, we'll go to Client Report, and we'll show how to create a 2-page snapshot in this case. So click on Report Builder, click on Snapshots Only to gray out all of the other pages and focus just on the snapshots. And in this case, we are going to keep all 10 because we're going to have room for them across 2 pages, but we're going to adjust the order slightly just to tell a bit of a story based off of where Will's at in his financial and overall life. So we're going to bring the net worth statement up underneath assumption details. We're going to bring the net worth summary just underneath that. And then we'll bring the estate summary below that. So what's happening here is we're saying, here's what you're worth today, your net worth statement summary. Here's how that's going to evolve over time given our assumptions. And then here's the final year's projection of what you'll have at the end of this plan. Now that we're done customizing the pages to include and the order, we'll go to Report Editor. And this is where we can once again proceed through each of the pages to customize as needed. So the first thing you'll notice is that there's references in the automated language to the retirement. Now in this case, because Will's already retired, we'll likely want to delete that bullet. So we'll get rid of it. And then there's also a section for the spending before retirement, which in this case, there is no pre-retirement period. So we'll delete that bullet as well. We can also get rid of the after retirement language here, and we'll just have spending of $60,000 per year. And then we can add in an additional line of text for his target estate goal. We'll click next and go to the assumption summary. Again, we'll get rid of the rate of return that references the pre-retirement period because that doesn't exist in this particular plan. And we'll leave the rest of the settings. We'll click next and we can review some of the additional tables that are included. So we have his current net worth with a table and chart, the net worth summary over time, the estate summary at the end, the goal status, and here we can enter in additional comments. So another option would be using home equity through selling, downsizing, or a reverse mortgage. So again, you can start with a pre-created custom plan and then add text relevant to this particular client as needed throughout. We can show him exactly how much he's taking out of registered accounts, contributing to TFSAs, and taking out a non-reg each year. We can show the shortfall in the final 2 years of the plan. And then we have a custom text field for recommendation summary. So I'm just going to paste in some values that I've created previously. So it's just explaining what steps we're taking with his accounts and what options he has available to avoid the shortfall that's currently projected. So now we can go to Report Preview, and we have those 2 pages that we saw at the start of today's demo. So we have the first page with the goal summary, assumption summary, where they are today, where they're projected to head, and how that will end, and then the slight underfunding. And again, because this is a customized and dynamic plan, every year that we revisit this with Will, we're going to be able to provide the same document with updated numbers. So it'll be easy for us as the advisor and easy for Will to be able to consistently refer to the same structures, charts, tables, and values. So that was our second use case. So we did a 1-page report. This is the 2-page report. And now we want to show how you can use the snapshots functionality as an executive summary within a larger plan. Because the plan that we're going to be creating for Lisa is quite complex, needing a more detailed plan, we actually pre-created it before today's session. So I'm going to go through the pages so that you understand what's included in the assumptions, but we're not going to be able to build it live. So I'll click Lisa Romero, and this is the plan that we've created for her, where we're going to show use of the snapshot as an executive summary. So we have her name, date of birth, province of Alberta. She's targeting retirement of 65 with projected length until 97. She has a target retirement spending of 120,000 a year with some additional travel. There's no income on the personal side because she has a small business where she pays herself a salary, and we've included it there. She has personal assets and a home, as well as a mortgage with about 400,000 remaining. And we've projected some values for her expected CPP and OAS in retirement. And then if we continue on, we can see that we've added a corporation called Study Savvy. And if we review how that was input, we have the province. We can customize the small business deduction assumption. We can enter in any notional account balances that we know. So here I've entered in things like RDTOH, CDA. These can all be left zero if you don't have the information available. That will create a more conservative projection for the client. Here I'm just entering in what information I have already on file. And then we have customization related to ownership of the corporation and the disposition, timing, and tax assumptions. We've also input an investment balance within the holding company. And now we can go to the planning page for the corporation. Now Snap has a very robust corporate module, which can allow you to model both an operating business and a holding company as a single entity. So what happens on the left is we have her operating income of $400,000 a year all the way until retirement. She's paying herself $270,000 as a salary, and she has $50,000 of other expenses, which leaves $80,000 of taxable business income, which gets charged a rate based off of the small business rate. She also has $19,000 of taxable investment income from her existing portfolio, which is subject to the full passive investment tax rate. That results in $17,000 of total tax, which gets deducted from her income, and a net deposit is added to her holding company. And that continues all the way until retirement with some automated capital dividend payments once they meet the certain threshold that we've input. In retirement, she has about 3.5 million expected in the corporation, and we're paying out a combination of eligible and non-eligible dividends mixed with automated capital dividends to distribute cash out of the corporation for personal spending over time. Then at the end of the plan, she's got about 2.7 million left in the corp. And we can jump over to her personal planning page to see what she's expected to have available personally. So she has about 120,000 of spending cash flow per year. That's taking her salary from the corporation of 270,000, subtracting off her taxes, CPP deductions, EI deductions, and her maxed out contributions to the RSP and mortgage payments. She continues to contribute to the RSP over time, and we're just maxing out her TFSA using the automated capital dividends. So you can see how there's a bit more complexity to this plan, and that's why we want to include both the snapshot and the larger report. In retirement, we have her drawing down from her financial assets to supplement her corporate distributions. As we continue all the way throughout retirement, we can see that she's projected to have about 1.6 million left personally, in addition to her 2.7 million in the corp. So she's very well funded for her target goal, and we'll be able to show her that with a more detailed report. So now we'll go to client report and show how to include the snapshot as an executive summary. So on the report builder, we won't click snapshots only this time. We're going to include things like the cover page, note to reader. We're going to also leave, we're going to use 6 pages within the snapshots. So we're going to get rid of the assumption summary because we're going to include a more detailed assumption details page. We're going to get rid of the financial asset flows because that's included in more detail elsewhere. We'll get rid of the net worth statement summary and the expense summary. And finally, we'll get rid of the recommendation summary because we'll have a larger one at the end. So really, when we include the snapshots, we can choose to include everything, or we can try to remove duplicate information and provide either just a high-level overview in the snapshot or a more detailed version, such as the assumption details later on in the report. So continuing on, we will get rid of things like goal details. We'll get rid of the asset allocation chart, the estate details, and then we'll move the net worth statement just above the projection. And we have articles that outline some of our recommended pages to include and order. So we have templates and sample reports that you can reference as you create your custom desired reports. So now we can click Save. And I'm going to go to Custom Pages and enter in a custom page that we can include at the end of our snapshot. So you can add multiple custom pages to a report and then customize where you want to reflect them. So for me, I'm going to have that up next, just at the end of the executive summary as an explanation for what's to come in the report. So I'll go to Report Editor, and this is where we can go through the pages again and customize what we want included. So for the cover page, you can add in your logo, you can select your desired background. Within the snapshots, we have the goal summary, the goal status, where we can again add custom text or remove information as needed. We can, within the up next section, I'm just going to add in some text here. So it's just explaining that the remainder of the report is more detailed underlying assumptions in order to arrive at the summary data provided in the large or in the executive summary. And then at the very end, we'll go to the recommendation details, and we'll paste in our similar text from previous cases. So now we've gone through the report editor, we've added our custom text, and we're ready to go to the report preview. So here we have our cover page with our logo and background. We have the executive summary, which serves as a reference point that the client can get a good, solid understanding of the plan and what's to come. And this way, by including it as an executive summary at the start of the more detailed report, everything will be much more digestible and informative because she already knows that she's on track for her spending goal. She knows, how much more she might be able to spend. She can see what her projected estate is and how it's broken out. So when she gets to things like assumptions and the charts and tables to follow, she'll be able to have more informed questions and a better understanding of what it all means. But it is still very valuable to be able to have a more detailed breakdown of her outflow assumption and her inflows, because we can see that there's a lot more moving parts here than can be captured in a quick, simplified chart. So this is the last example that we wanted to provide of using an executive summary in a larger report. Again, you would just click Generate PDF and then download the file. Now we've focused today's session primarily on the reports because that's what we wanted to cover, but there are lots of other features available within the software. So we've seen the corporation, the recommendation tool. We have a stress testing module that allows you to do historical and randomized rates of return. So when you do sign up for your trial, I would encourage you to check out our help site. So you can go to Help Center. That's where you'll be able to view all of our previous webinars on various topics, search for key terms related to any transaction that you're looking to model, and you can also reach out to our support team directly by phone or email in order to get one-on-one support. With that, I'm going to pass it back over to Alex for a few next steps, and then we're excited to open up for questions.
Wow, Steve, thank you so much. As Steve just said, we have covered a lot this hour, but we are here to address any and all questions in just a moment. And thank you so much for all the questions that have come in. We've got a ton of them. So I'll just quickly go through a few things here, and then we will get to the Q&A. So as you saw at the beginning, we have a special offer for those of you here with us today. All live event attendees who register for a free trial within the next hour will be entered into the draw to win Snap's dedicated onboarding and training package, a $500 value. You'll receive a 60-minute personalized strategy session, plus be provided with a dedicated support person for 30 days. This means you'll have priority support from a member of our customer success team who will maintain a relationship with you as you learn the program. To start your free trial and be entered into today's draw, you're going to visit snapprojections.com. I'm going to send the link in the chat now that will take you directly to the pricing page you are seeing at the screen. So just click the arrow beside the chat and that will pop up for you, and you can click that link before the session closes out. On the pricing page, you'll see there are two plans for you to choose from as an independent advisor. The advisor business is the plan you want if you need to have access to corporate planning. We also have a stress testing module that is an add-on, but it's free during your free trial, so make sure you enable it right away. If anyone wants to see how the random and historical data sets can be applied to stress test your projections, just let me know and I will try to make time for that during the Q&A. And a reminder to existing SNAP users that you can be earning free months of SNAP when you send referrals our way. This program is win-win. The referred advisor gets 50% off their first month of SNAP, and the referring advisor gets an entire free month of service when the advisor they send our way becomes a paying user. There is no limit on how many times you can do this. We have created a new referrals page that you can access from within your SNAP account to make it even easier to leverage this program. So with that, let's get on to your questions. So we had a few questions come in during the first case, Steve, about life insurance proceeds and inheritance. So specifically looking to see permanent life insurance and how the cash value could be shown as an asset to supplement retirement income. And then can we show an inheritance? So perhaps we can cover those two items.
Perfect. Yeah. So let's start with the insurance. So under scenario setup, we can go to insurance and then insurance policies. From here, you would click add insurance policy and enter in the description. That can either be the institution where it's held or who the beneficiary is or whatever detail you'd like to include. So I'll just put whole life here. We would select the policy type. So term, whole life, universal. Select the individual who's insured, and then you would have a fully customizable chart or table for the policy input. So you can actually copy and paste directly from your insurance quote or Excel or wherever you have the insurance information directly into the software. So that's the quickest way to get the information in. And then once you have the death benefit, cash surrender value, and annual premium, that information will reflect on the planning page. So I'll just do an example where I'm manually entering it in because I wasn't able to bring up a sample quote quick enough. But if we have, say, the cash value, the death benefit, and the annual premium, when we go to the planning page, we can see the policy information is reflected here. And so the cash surrender value is included in the net worth. We can see that is added here, insurance cash surrender. The death benefit is included in the final estate. So we can see insurance proceeds highlighted here. And then the premium is reflected within the client's cash flow demands. So all of that is reflected. If it was a larger policy, we could model things like a policy loan or withdrawing from the cash surrender value. We do have articles in our help site related to following any of those processes. With respect to an inheritance, the way that we would model that is within the scenario setup, we would go to incomes, and we can add a new income such as inheritance, enter in the amount, so 400,000. It's non-taxable, non-RSP eligible, and we're just going to have that for 1 year at the client's age 70. So we can enter in the exact timing when we expect it and the dollar amount. And now when I go to the planning page for that year of the projection, we have this new column added under incomes. And as of age 70, we have that 400,000 cash flow, which gets added to the client's resources. And we can see it being deposited across the TFSA and the RRSP. Now that's the default logic within this projection in particular. If we don't want it going to the RSP, we can always click on that, set it to 0, and then the software would allocate that into the savings account instead. So now if I go back to that same year, or it actually looks like they have enough TFSA room to absorb it all. So the software will contribute that on a tax efficient basis depending on the client's circumstances.
Perfect, thank you. Next question, do you have a client workbook for initial setup? And I think this is a great opportunity to quickly show the financial planning toolkit, which also includes a brand new client-facing video.
Yes, perfect. So In terms of the initial plan creation process, we have a detailed article called Creating Your First Projection. So this is going to take you from the first page that we started with today all the way to reviewing the scenario. So each and every page with detailed steps on what to include and what to consider. In addition to that, creating your first projection, we have a video tutorial. So this gets updated regularly as we release new features. So this is a series of videos that are broken out by section. It's about an hour total, and you can review those on YouTube in short snippets. Once you are comfortable with the data input itself, we have what's called our toolkit. So if you go to, again, the Start Here section, we have our Snap Projections Toolkit, and that has a ton of accelerator resources for you. So we have the planning questionnaire. So this is how you can gather the data from your clients. So that's a Word document with all of the input fields that you can collect the incomes, debts, things of that nature. We have a new plan review checklist to let you, kind of review as you go through, make sure that you're entering all of the information. We have sample reports to show you how you can create different client deliverables. We have a value of planning one pager. So just lots of resources to try and tackle the most common client questions like, why would I want to do a plan? What is it going to include? That's what this video is for. It's a quick 2-minute video that outlines for your client what's involved in the financial planning process and what value will they get out of it. So we really love hearing from advisors, hearing what your challenges are and finding ways that we can help provide resources to tackle those. So that would be the main resources that I would recommend when getting started.
Perfect, thank you. Next question, are all the recent changes regarding capital gains changes updated in the software?
Yeah, so very quickly after the budget was proposed, we were able to release a feature within the software. So in scenario setup settings and then income taxes, you have the option to turn on the new capital gains rules. So because they are still not past royal assent, we have not turned them on by default in all scenarios, but you've had the ability to turn them on and do analysis since about April. So that functionality is already in. Once it passes royal assent, we will turn that on by default for all new plans, but you do have the ability to turn it on for all projections as of today. With regards to the lifetime capital gains exemption, as of right now, we model lifetime capital gains exemption on asset sales such as corporations or farms or whatever property is eligible for that by increasing the cost base assumption on that particular asset. And that will offset the calculated taxable income. Our team is reviewing adding a more formalized or dedicated feature for it, but that will be kind of prioritized amongst all of the other opportunities that we have available. So hopefully that helps.
Perfect, thank you. And last question we are going to squeeze in here. Can you elaborate on how the software chooses which assets to draw from in retirement?
Yeah, so the withdrawal logic is what we refer to as the cash flow management order. So this is how the software determines where to take money. By default, the withdrawal is set as non-registered, then TFSA, and then registered. So that is based off of research that was done by FP Canada, as well as previous research by the CFA Institute into efficient drawdown strategies. So this provides a very efficient way to decumulate assets if the client's primary concern is longevity risk. So if they want to maximize how long they'll have money for, then this default withdrawal order of non-reg TFSA RSP is efficient at doing that. But we recognize that all clients have different goals and circumstances, and so it's quite easy to change those settings or to customize withdrawals on top of those settings as needed. And we have lots more resources on how you can do that, as well as previous webinars where that was the main topic.
Wonderful, Steve. Thank you so much. Well, everyone, we are out of time. I would appreciate if you could take a moment to provide us with some feedback and let us know what you'd like to see next time. A quick survey will pop up on your screen in just a second here. If your question wasn't answered live, I will follow up with you via email. And you've got 1 hour to get entered into the draw for our onboarding package, a $500 value, 14-day free trial. You can get started today. Thank you so much for being here today, and I hope this has been a valuable session for all of you. And you will receive a video recording of this session in 1 hour with a link to fill out to request your CE credit from today's session. Enjoy the rest of your day, and I'm looking forward to continuing the conversation. Bye for now.